Hello everyone. In today's episode of Quantum Insights, we are going to discuss about an incredible milestone, 13 years of Quantum Multi-Asset Fund of Fund. This has been an incredible journey, momentous occasion, and we also have the mind behind it. We have Sneha, who is the fund manager for Quantum Multi-Asset Fund from Fund of Fund.
Hi.
The first thing which comes to my head is, what is a multi-asset fund of fund?
So Yash, to understand a multi-asset fund of fund, I'll start by explaining what is a fund of fund first, and then we'll move on to a multi-asset fund of fund. So what is a fund of fund technically? A fund of fund is basically a mutual fund which is investing in units of other mutual funds. So basically imagine, like in our multi-asset fund of fund, we have exposures to units of other mutual funds. Like we have exposure in the liquid fund, we have exposure in the dynamic bond fund, we have exposure in the equity fund. So idea here is a fund of fund basically invests in units of other mutual funds. These could be mutual funds of the same fund house or a different fund house. So now coming to a multi-asset fund of fund. In the multi-asset fund of fund, you invest in multiple assets. Now again, how in multiple assets? The asset exposure is divided. You get the diversification here, but again you invest in units of other mutual funds which are varied in the asset classes. So example, like the multi-asset fund of fund, you invest in say a liquid fund which is a debt fund. You invest in a dynamic bond fund which is again a debt fund. You invest in an equity oriented fund, could be value style, could be growth style or any other style, that could be an equity oriented fund. And you can invest in a gold ETF or a gold fund where again you get the diversification benefit of a commodity here. So to sum it up, a multi-asset fund of fund is taking exposure in units of mutual funds which are varied in asset classes. So you get equity, debt, gold, or maybe some other commodity per se.
So, understanding this, what I feel so is most of us, a lot of that we are searching around multiple funds. So, this solves that question. But again, a follow-up question on that would be, what kind of investor should be looking at a fund like this?
So, like you said, it's for people who have this. So, it's one for those crowd out there. Or if you're a new investor, you're starting out for the very first time and you want some sort of an asset diversification in your portfolio, but you have no clue about how to achieve it. So you invest in this multi-asset fund of fund and you get the diversification benefit. Now here you are saved of the hassle of trying to select the mutual fund that you want to invest in. Like say for example, if I ask you today to create a new portfolio which has all the three asset classes in your portfolio, okay, you need to have debt, you need to have equity and say one commodity or gold, okay. Now if I ask you to create a portfolio, your first question is going to be, what is going to be the weights in which I should have an equity or a debt or gold? Okay, so that's weight as one of the measure while creating your own portfolio. Now the multi-asset fund of fund is already taking care of it. He's already decided, the fund has already decided the weights for you. So that's one task out of your, your hassle, gets you hassle free out there. Then the second task is now within equity, within gold, within debt, which mutual fund should I invest in? So then could be, like in equity, you can have like a variety of funds. Like you can have a value fund, you can have a growth fund, you can have a sector specific fund, a thematic fund. Like the variety out there is too much. So this option of choice, this choice dilemma, it creates a lot of confusion among first time investors. So for an investor who is really entering into the market for the first time, trying to build up its own portfolio, but also wants some diversification in its portfolio, that person can evaluate, this multi-asset fund of fund because the fund is already doing all the hard work for you.
So I understood what you're trying to say. But apart from making my life hassle-free of selecting one fund individually, apart from that, what would be the other significant positives you would like to highlight?
So I think one of the underestimated or unaccounted for biggest positive that comes along with a fund of fund is that whenever so imagine you doing it individually yourself, okay? You have an exposure in one equity fund, you have an exposure in a debt fund and an exposure in a commodity fund, say gold. So you have three funds right now. Now if you want to make a switch from your equity fund to another style of equity fund, say you go from a value style to a growth style oriented fund, like you want to make a switch from equity, within equity, but you make a switch from one fund to another fund, that is taxable to you. You pay long-term capital gain or short-term capital gain depending on the holding period that you have. But when a mutual fund of fund is doing it, like a fund of fund is doing it, they don't get, the tax portion doesn't get passed on to the ultimate investor.
Correct.
So that's one big advantage. Like, I think maybe investors should evaluate that while making, when you're getting a hassle-free investment done for you, like somebody is doing a ready-made job and giving you a fairly optimal portfolio.
Okay, so I am pretty much clear about that diversification part which you explained. But coming to the main part, what are the limitations of the fund? Because that's necessary.
So, I think a primary limitation is the added expense ratio. I mean, see, we are handling other funds which are forming part of this particular mutual fund, which is why it is called a fund of fund. So, the expense ratio is slightly higher as compared to a single mutual fund exposure that you would take. So, the expense ratio is slightly higher. That's for that. And another limitation could be, you don't get to choose in what fund you want to invest in. You can invest in a style. You get the option to invest in a style. Like in a multi-asset fund of fund, you can understand that the asset classes that you're taking exposure in, that's debt, equity and gold, for example. So you get the asset class diversification, that's there. But you don't get to choose like what portion of debt do you want? What portion of equity do you want?
Correct.
So it's already it's being decided as a part of the fund. It's part of the fund strategy. So you while evaluating as an investor, you may have to look at the fund, and you'll have to evaluate whether this is a very conservative or a very protective fund or a very aggressive fund. Like these are all hybrid funds.
So this depends on
the
the investor appetite.
Yeah, appetite. Yeah. So you take care of your appetite. You take note of your appetite, and then you have to evaluate these funds, understanding that whether this is a very aggressive fund, maybe do I want such an aggressive fund or not. But you can't change a strategy internally within the fund. Like that's what I was trying to tell you. See, if it is a very aggressive fund, so it may have like a higher equity exposure, but you can't choose for it to be a very conservative fund because you can't decide the weights it will invest in terms of debt or in terms of gold.
Correct.
So that is one of the limitations. Your freedom to tweak or make tweaks in the portfolio, that's gone. But then that is inherently the advantage of this fund as well. Like since you are a new investor, like I said, you're a new investor, you don't understand the nuances so much and you don't understand like how to rebalance the portfolio yourself, you give it to the expert. So it's up to you. This is a choice that you make while you come up, and it's a choice that you give up basically while you come up and make an investment in a multi-asset fund of fund. So I think this is also the limitation, that you don't get to choose what proportion of debt or equity or gold you want in your portfolio. Then that would inherently mean that you are making your own portfolio.
That makes sense.
Yeah.
So apart from this, but again, I have a question. Let's say I have 3 different funds. The expense ratio would be something specific to all 3 different separate funds. If I have 3 separate funds which I am maintaining, and I have a multi-asset fund of funds which I am maintaining, would it still overpower the expense ratio of the 3 separate funds which I am holding?
It can, it cannot. Maybe not. So it depends on what funds are we investing in. So like as a fund of fund, what funds are we investing in? It primarily depends on that.
So while I understand the aspects of all this, but again a question for an investor comes to how to select the correct multi-asset fund of fund. What would be the parameters should I look into a fund while selecting it?
So, Yash, I'll give you one parameter which is really not spoken about much, and it should have some limelight, but it is not given the limelight it deserves. Apart from that, you'll find all that in the world about, you compare returns, you compare the expense ratio and everything. You'll find a lot of material and a lot of noise around that on how to select a mutual fund. I'll tell you something which people don't tend to look at, but they should, is the maximum drawdown for a fund. Now that is maximum drawdown is in a worst period in a given history of your fund, what has been the worst day for your fund, and what has been the, when I say worst day for your fund, the maximum तुम्हारा fund कितना नीचे गया है in a given particular period in a history, तुम्हारे fund के history में तुम्हारे fund का सबसे lowest point क्या रहा है. That is basically what you need to understand.
You should consider this. I would obviously take this because returns are historical. You can't decide how the fund is going to perform
Yeah.
since it's historical, but drawdown is something we should always consider. I mean,
and then
point taken.
and then you should consider that you can maybe compare that with a benchmark, or you compare that with other funds and try to understand the beta or maybe the correlation between your fund and the market and your fund and the other funds. Like if say the benchmark has gone down by 10%, how much has your fund gone down on that particular day or during that period of turmoil or whatever. So I think one aspect, I believe, the market is discounted it's not really spoken about too much, but maximum drawdown is a very important indicator of understanding how your fund has fared in bad times. So if your drawdown value is low, that means तुम्हारा fund is doing better, but it's not doing as bad as the benchmark maybe, you're doing better than the benchmark maybe. So because positives, maybe it's okay to miss some positives, but to go lower than the benchmark and negative cycles and everything, that can be a slightly a risk factor that you can consider while looking at multiple fund options.
And I mean, when the fund falls, I guess it harms the investor's confidence into a fund. किस level पे गिरा है? It's always the confidence, right? If it's above the benchmark, my confidence over my fund, because my wealth is protected. The first perspective of investment is wealth protection. If the drawdown sums it up, I mean, it's a go for me.
So drawdown is a very good aspect that investors should really look at the maximum drawdown for a given fund. So you understand कि maximum कितना खराब किया है मेरे fund ने आज तक. That's one aspect that your drawdown will tell you.
I mean, a mind opener for me. Any last note you want to give out to our investors watching this? How should they consider, and how your journey of managing this fund has been?
So to be honest, I don't see like a very this multi-asset fund of fund is a very simple option that you can start off if you're seeking some diversification in your portfolio. See, I handle debt funds, but to a huge audience out there, debt as a category still is very it's a very rare resource, or they don't understand debt as well. There's a large group of participants out there who don't understand debt as a category. So if I'll give you an example. When I tell my relatives that I am a fund manager, so the first response I get from them is, oh, so you understand equity very well. Which equity fund do you manage? And then I take a step back and I tell them I manage debt funds. So they don't understand. They go, mom, because they don't understand the debt as a category. So audience at large, investors at large, they don't truly understand debt, because there is some complexity involved in debt. So it's really intimidating for a first-time investor to decide which debt funds to invest in, which commodities to take exposure in. Even in the equity class, you have like a bouquet of, you see all these fund houses coming up with a thematic fund, and you have some value and growth style are very traditional, but then some thematics, they'll come up with renewed names on thematic funds and something of that sort. So then it's very daunting for an investor.
I'm waiting for somebody to launch a Gen Z fund. Maybe people like me would be attracted. High risk, high reward, something like that. I mean, I'm just kidding. Yeah, but please.
No, but initially is fairly intimidating to decide which category to enter into, which fund class to enter into, what proportion of which fund you should have in your portfolio. So to save yourself all of that complexity, and you don't want to miss out on the opportunity of generating wealth.
I mean, thanks Sneha for giving me a broader perspective of understanding a multi-asset fund of fund. Again, congratulations for the 30th anniversary.
Thank you.
And all the best.
Thank you. Thank you so much, Yash. Take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.